Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 10th of May 2024. First chart is the US dollar index futures. We always do this chart first as it plays such an important role in the price action of many other markets. Now this week you can clearly see that price traded as an inside bar this week, inside the previous bar's range on a relatively low volume. Sometimes it can be difficult to see exactly what's happened using the weekly chart on an inside bar like this, especially an inside bar on low volume that's moved higher and closed in the middle. When this happens, I'll often look inside that bar to the daily bars that make it up and see if you can see what the story is that's being told. So we'll do that now. Here's the daily chart. That was Friday week ago. So the first day this week was here, which is a absorption bar. It's a test for supply pretty much. There was no demand to the upside. You can see the low volume down here. No demand to the upside and some testing for supply in the bottom. In response, prices pushed higher with a good spread on a slight increase in volume, but still well below average. Now, there's the lows of that range there. So this is the breakdown line here. And prices moved up to that level and closed at it on reduced volume. So it was a bit of a lack of demand to the upside there, a half-hearted attempt to move higher. Next bar has attempted to push higher and then closed lower on an increase in volume, almost up to average. A little bit of supply has been drawn out, probably from the left over here. And Friday saw the market trade with similar volume. There was no attempt to move higher. This was an absorption bar. The market just consolidating for the week just below this more important level here. So there's been a push higher on relatively low volumes, a little bit of supply encountered, and then a consolidation. We go back to the weekly chart. So the market's attempted to push higher. It hasn't really made a serious attempt to challenge the supply that's been contained up here. There's the highs of the range. And there's been no serious attempt to challenge that level. So prices really just moved higher on low volume and then consolidated. This is the E-mini S&P. This is S&P 500 index futures. And last week, price spent most of the week testing for supply and consolidating. And this week it's pushed higher in response on low volume. So that really suggests that selling pressure was fairly low. Prices probably pushed up. And if you'd like, we can look inside this bar as well. Here's the daily chart. This is the first bar this week. So you've had some highs come through here. Prices pushed up on average volume. That's a nice push higher. There's a level through here. There's expected to be some supply to the left here. Prices pushed up into that level. There's an absorption bar and a test for supply. A further push higher. And then just a half-hearted attempt to continue higher. Probably some consolidation in that as well. So that's not a bad week on relatively low volumes. The market's pushed higher, absorbed the supply that's been drawn out at this level, pushed higher again, only modestly, and then spent some time consolidating. It's probably drawn out a little bit of supply out of the top. That's what you'd expect at this level. There's the next line that comes through there. So you can see the market's been absorbing supply through here like this. Back to the weekly chart. That makes more sense now, doesn't it? It's a relatively narrow spread but low volume bar where prices pushed up. You'll probably draw the line through there like that. Prices pushed up into that level and then absorb supply just above it. So that looks okay. US Treasury 10-year note futures. The important line comes through here. Price, after reluctantly moving lower here, pushed higher in response. And this week, it's pretty much consolidated sideways. There'd be some testing for supply in the bottom of that bar and some absorption in the top. It's an inside bar. It's traded inside all week on much lower volume, well below average. This is a consolidation and absorption bar. That would leave this market reasonably well placed to push higher if trading conditions are favourable next week. Copper price futures. Copper price futures have pushed higher with relative ease this week after a period of consolidation. If we come back to this bar, then you can see the volume was very high on that bar, and really we determined at the time that the market was absorbing the last of the supply from the left here, and it spent pretty much the whole week doing so, and in response price pushed higher on pretty high volume, no doubt about it. The next week there was some consolidation in the bottom of the next bar there, and then a modest push higher, but the reduced spread and still high volume suggests that there was still some supply in the market. The next bar attempted to push higher, but then came back and consolidated. So we'll call this one an absorption bar, very similar to this bar. And this week, in response, there was a little test for supply, and it must have been low volume, so very little selling pressure in the market, and that's allowed the market to push higher on closer to average volume, which is a much more sustainable push higher. So this bar back here absorbed supply and consolidated the market, and it appears this bar here has also absorbed supply. And consolidated the market, and that's allowed the market to push higher overall in a more sustainable way. Now, it does appear the market is getting a little bit overstretched, all these overlapping bars, but markets can continue higher for longer than you expect at times. So there's no obvious sign of selling pressure emerging at this point in time. It's certainly not overwhelming selling pressure, but it is looking a little bit overstretched. You haven't had any down weeks for 1, 2, 3, 4, 5, 6, 7 weeks. So you probably expect a down week at some time. It may come as an inside bar at some point, sort of like that, prior to a secondary push higher if selling pressure is found to be low. It looks okay. It certainly doesn't look bad. Gold price futures. Now, gold price futures have been in consolidation mode after supply was drawn out on this bar. That's this volume here. There's no doubt that there was some selling pressure emerge in that bar. And in response, you've had 3 weeks where, well, the first week price attempted to move higher, but encountered further supply. That's here. And then you've had 2 weeks following that on low volumes where the market has consolidated and found that there's a lack of selling pressure in the market now. And that's allowed price to push higher this week on an increase in volume, slightly above average volume. So spread's not particularly wide considering that was slightly above average volume. So there may still be some supply in the market, and that may see this market just test for supply early next week and then respond depending on how much supply is drawn out. So if supply is found to be low, there'll be a further attempt to push higher. And if supply is found to be a little bit higher than average or high, then price will probably come back a little deeper and challenge those sellers to some extent. Silver price futures. Silver price futures are generally a little more volatile than the gold market, but are still trading in a similar fashion. So you had supply drawn out on this bar, same as in the gold market, on very high volume. A secondary attempt to push higher, which failed. And then two down bars. The first one here was on pretty high volume, so this was a lot of traders getting out. And then last week, volume was much lower, which has allowed the market to push higher this week because selling pressure was low. And volume was pretty low this week, considering it was even lower than the previous week, and prices pushed higher with relative ease. And that's showing you that selling pressure was low, and that allowed the market to push higher with relative ease, because most of the traders have gotten out on this bar, which looks more like this. That's where the traders got out to lock in their profits. And last week, price drifted lower on relatively low volume. And then this week, prices pushed higher with relative ease. So that's where the market is. It's been following gold more than leading at the moment. Both markets, gold and silver, are now trading adjacent to this bar's close where supply was drawn out. So they're both about equal. Although this market pulled back more deeply, it's always a little more volatile than gold. So we'll see which one's leading at the moment, probably next week. But both are back at the same point and look well placed to push higher if selling pressure remains low. Like crude price futures have encountered some supply more recently. We saw the consolidation take place through here, and then some bullish absorption through there. An attempt to push higher and above this breakdown line here, but price did fail through there. The next line comes through there if you're interested. Price did fail here. Supply was drawn out. Price pulled back to the breakdown line on these two bars. Price did break down here. And this week, the market spent all of its time in consolidation and absorption mode, adjacent to where there was this bullish absorption to the left. So there's an attempt to consolidate the market. If it fails, it's probably coming back to this 75 level. If it's successful, I expect it'll push up, and we'll see how strong it is back up to the 81 level. It may just fail there and then move sideways. We'll see. But at this point, the market spent almost the entire week in consolidation and absorption mode, and that probably gives it a chance to move higher in response, or at least an attempt to move higher, and probably back round to the 80 level here. Then we'll see what happens at this breakdown line above. This is the Euro-US dollar currency futures. And the important line comes through here. Market found some support here and pushed higher. It attempted to hold on to this level, but broke down below it there. Now prices pushed back up, and this week it's tested for supply, and the low volume suggests that supply is relatively low. Now, this market generally trades the inverse of the US dollar, and that's sort of what it's done this week. It's well positioned to push higher, but that'll only happen if the US dollar trades lower next week. If the US dollar does attempt to move higher, this market will test for supply a second time or break down, one or the other. But I would expect this market will test for supply next week, like this, or make some sort of attempt to push higher. Either way, that's a relatively positive outcome. British pound currency futures, pretty similar to be honest. You've got the same level comes through there. The market tested for supply this week, and it's a fraction weaker than the euro. It was leading the euro previously, but more recently it's just trading a fraction weaker. So if this market does push higher, it'll only push up to this old breakdown line here, and perhaps challenge that line if there's weakness in the US dollar next week. But This week, the market tested for supply, similar to what the euro did. Aussie dollar currency futures. The interesting level comes through here. This is the highs of the range. This is the lows of the range. Price broke down below that level. You've got this consolidation in the background where there was some buying support found in this bar. It's allowed price to move higher. It's moved up to the highs of the range, and it tested for supply or consolidated this week as an inside bar on reduced and slightly below average volume. Same as the previous two currencies, this market is in a good position to push higher if there's any weakness in the US dollar, or test for supply if the US dollar attempts to move higher. Bitcoin futures. Bitcoin futures, bit of an ugly looking bar this week. This was an attempt to push higher, which wasn't supported. And then some supply has been encountered and pushed price down. Now, it's traded inside the previous bar for almost the entire week. So overall, it's probably a consolidation and absorption bar. But if you have a look at inside this market, you can see that price attempted to push higher here on reduced volume and well below average volume. This is an unsupported push higher. The market attempted to push higher and it wasn't supported broadly across the market, and so it failed and price closed near its low. And this is a secondary attempt to push higher, which wasn't supported either. Volume was even lower, and so price closed near its low again, poorly. Then you've had a test for supply on relatively low volume, so selling pressure was low. There was just no demand for the upside. This is a little mini shakeout, and a little bit of supply was encountered, but very little overall. An attempt to push higher in response did encounter some supply, and price pulled back in response to close the week at its lows. So the market's attempted to push higher for 2 days. That wasn't supported. It wasn't broadly supported. 2 days of testing for supply. A little bit of supply was encountered. It was still below average overall, so it wasn't too serious. But supply was drawn out. So you'll probably find test for supply early next week. And if supply is found to be low, a push higher. If supply is drawn out, you may have further trading down at this level or somewhere down there, probably adjacent to this trading, in an attempt to absorb the supply. And obviously, a break below this level here would see a price breakdown, and that would be a poor response, obviously. So back to the weekly chart. Makes more sense now. You can see that price attempted to push higher from the previous close. This push higher wasn't supported. A little bit of modest supply has been drawn out. The weekly lows probably come through there like that. So you've probably closed at the recent lows. This is where supports come in previously. Prices dip below, supports come in, it's closed above it. Prices dip below again. Prices recovered to close back above it. So this is your important level, just a fraction above 60,000. And you would hope that some further buying support comes in at this level. And you may see a little bit of testing for supply early like this, and probably expect to see that supply is relatively low and the market can consolidate at this level prior to any attempt to push higher. It is at a pretty important juncture here. You don't really want to see price dip considerably lower like this bar a second time. At this point, we are at an important juncture. You would like to see buying support emerge. Back to the US dollar index futures just quickly to finish up. And this week price traded as an inside bar on low volume, closing in the middle. There was a little bit of a lack of demand to the upside. So you'll probably find that the price does test for supply, within the range of this bar, at least early in the week, then it will depend on how much supply is drawn out. If supply is drawn out, then I expect price will probably come back and test this 104 level for strength. If supply is found to be relatively low, then I expect the market will attempt to push higher, perhaps with a bit more vigour than it did this week, because this week was really a half-hearted push higher on below average volume. So it really didn't try to push higher. The highs of the range are at 106. That's the really important level currently. And the lows are the 104, which has been an important level for a long time, which is why I've got this level marked. So I expect a test for supply early in this market. That will allow some of the other markets to move up in response. And then we'll see later in the week how this market really does respond, depending on how much supply is drawn out. Okay, thanks for your time. See you next week. See ya.